And coming up next, we have Robert Vallis, CEO of TIGR Gold, who rang the bell today on the TSX Venture Exchange today, or the TSX market today. TIGR is a growth-oriented gold exploration and mine development company focused on advancing its flagship asset, the Quinchia Gold Project in Colombia.
Yes, we've been very busy. TIGR Gold just listed on the TSXV late December. We're now DTC eligible and operating in the US and churning through some significant volumes, of course, since then. So we're well on our way in terms of generating interest and awareness of TIGR right now. Cautionary statements, you look at them. Look, we are predicated on having a strong set of legs to the stool, if you will. Strong, proven leadership led by myself, 30 years in the industry, long tenures with companies like Barrick Gold, Yamana Gold. I'm a mine engineer, been all over the planet, M&A, acquisitions, finding, building, and acquiring mines. That is also the team around me. What we have here, of course, is something of significant scale, over 2 million ounces in the ground. We've got a PEA that we completed on that late last year, describing a very valuable opportunity here. And from that, of course, defines where we are against our peers, and we're quite undervalued right now in the market against our peers, but moving up that ladder as well quite aggressively through the drill bit and through the ongoing awareness campaign that we're going through with us newly on the scene. Of course, we've got a significant upside potential, which I'll take you through very briefly. So again, the team we have, very cross-functional, very capable, global, international experience, as well as in-country experience on the ground, poised to certainly take this from where it is today all the way through a construction decision and into operation. We are in Colombia, of course, elephant country, I call it, where we are in this Mid-Cauca belt, just surrounded with high-scale, large valley discoveries. We're just south of Medellin and to the east of Bogota, in a very sweet spot of Colombia. But Colombia itself has come a long way in the 12 years I've been there in terms of improving its geopolitical stability. It's incredible now. It rivals any South American country in terms of its attractiveness, not only from its clear geologic endowments, which right now the gold district in Colombia is outstripping every other gold jurisdiction on the planet over the last couple of years for its rate of discovery. So it's definitely an emerging tier one opportunity here. But access to skilled labor, to infrastructure, and global logistics is something that just checks every box here. In addition, it's a temperate climate, so we're not dealing with northern Canada or Brazilian type rainforest. This thing is operable all year round. And more specifically on the ground, you see the enablers that I speak to with respect to constructability and operability. We have them all. Most projects lack one or more. We have them all. A paved highway running by us there, the red line, paved roads going into our site. The town of Quinchia next door to us of 50,000 people, great base of operations, logistics, and otherwise. We've got grid power running by us. And just to the north, geologically, we've got Aris Mining, a 250,000 ounce producer, just announced they're going to 500,000 ounces by the end of the year. Obviously, a world-class producer in gold discovery. Right next door to them, you have Collective Mining with their Vallis project. They themselves have done an incredible job with defining an extremely rich and rare discovery that clearly has them valued now at I think just under a 2 billion market cap. But it certainly speaks to the geologic endowment of this immediate jurisdiction and the fact that we share, at least with Collective, a lot of the similar geology on surface. As we now embark to go deep, we're certainly excited about continuing the discovery process as well. And speaking to that, right now we've got 3 discoveries that define the 2.5 million ounces. We have 2 million of which are now current compliant 43-101 resources. That is what we built the PEA around. The Miraflores here in the center deposit, which is about 500,000 ounces, and the Tesorito deposit, which is about 1.5 million ounces, comprises the 2 million ounces that describe the PEA. Important to note that Miraflores is now fully permitted for construction and operation as of mid-24. So that bodes very well for our project of sort of having it pre-vetted, if you will, for not having any environmentally sensitive or restrictive aspects to it. which in turn allows us to fast track subsequent permitting as we continue to grow that. But for now, we've got 3 drills on site operating, 2 at Tesorito, 1 at Dos Quebradas. Tesorito, we're infill drilling aggressively and extension drilling to grow the size of the pit, pull it to depth, push it out on strike. But more specifically to infill drill it to get it from inferred up to measured and indicated so that we can take it to the next level of engineering. Next to that, of course, we've got the Seabell discovery where we're going to be moving one of those 2 drills from Tesorito over to, in very short order over the next day or two, to begin drilling that Seabell. This is the discovery that was made just after Tesorito by the previous owner, but they stopped drilling there. You know, they ran into financial hardships and had to stop. But what was discovered here is mineralization right at surface that's consistently mineralized down to 500 meters depth with about 8 holes they drilled. Now, there's also copper showing up in that, which has us very intrigued and interested, but to have that sort of consistency and scale to the mineralization immediately next door to Tesorito and Miraflores obviously indicates a major extension to this gold system. So we're clearly interested in 2 things with Seabell. One is to be shallow drilling on surface to define a new surface resource, which will most likely be quite similar to Tesorito in the scale of maybe 1.5 million ounces. But in parallel with that, we're drilling deep, or will be shortly, down through Seabell, down to at least 1,000 to 1,200 meters. So that's, you know, upwards of 3,000 feet or more depth to really probe and answer one of those important geologic questions of what's feeding all of this on surface. We know there's what's called feeder systems beneath. We're just not sure where it is and how big it is. That's clearly sort of the size of the prize for us here as well, knowing that Collective did discover the feeder system in their project. Sort of speaks to where this can go in terms of valuation as well, but even more specifically for us, where we need to go to get our arms around the scope and scale of this project and its potential to be able to then move to defining something that's constructible and operable. We have to know that first, obviously. So very exciting opportunities all around here. I can continue to talk a lot about it, but I think to keep it short, final thing to say is true scale here. All of these dots are surface sampling. What we discovered last summer was a massive footprint just south of the Seabell discovery that has not been drilled yet, but you can see the scale of that gold on surface that's relative to every other discovery. It dwarfs it. So we know there's likely a significant extension to this gold system. We'll be excited to continue to push the drills down there in time. Of course, this speaks to the proximity effect that I'm talking about and a lack of knowledge to depth, huge opportunities for further discovery. That PEA that we did, it really was done at 2650 long-term consensus pricing in September. Now, of course, something like 4,600 makes more sense. We're rebooting this with Ausenco, by the way, who did the PEA, world-class engineering firm, to have it with a new price deck. So we'll be putting that out over the next few weeks, but at least sensitizing the model to that. We're at about 1.75 billion post-tax valuation and near a 50% rate of return on the project. That's really from what we have today in the ground with Tesorito and Miraflores. It can produce about 140,000 ounces over 10 years at competitive prices. So it's a very strong base that really shows why we're re-rating against our peers now aggressively, just as we're out of the gate since December trading and moving up that ladder. It shows that we've got a lot of stored value, but of course, not only the potential for us to double our resources with bringing in the Seabell resource of about 1.5 million ounces, bringing in the Dos Quebradas resource at about 500,000 to start, is where that 2 million upside comes from that we're focused on for 2026. That would double our ounces, but that speaks nothing about the discovery potential I've already spoken to at depth for much higher valued material, and that we think would certainly propel us well past our peers in terms of valuation. So the opportunity here for re-rating, for valuation gains throughout this year is substantive for TIGR Gold. And any way you slice that value opportunity, we're certainly poised to be bringing significant value that we already have done for the shareholders we have, but continue to do that through the year. And our positioning against our Latin American peer group is very strong. Obviously, by doubling our resources, we expect to move well past that. And of course, our capital efficiency through the PEA is demonstrating a very competitive project in terms of capital spend and requirements. So ultimately, to wrap this up, we've done a lot to position Tiger Gold through acquiring the project, developing a PEA, securing 16.5 million, listing, getting 3 drills now up and running. These clearly present us for positioning for 26 to produce more catalysts through the year. The first will likely be a reboot of the Tesorillo resource. That'll likely be much higher grade, more ounces, likely more tons as well, but also the beginnings in the second half of the year of initial resources for Seabell and Dos Quebradas is what we're focused on. And obviously those discovery potential at depth as well. I should say quickly that in a parallel with all the drill bit things and resource things, is there ESG or environmental and social aspects on the ground? We are running full steam ahead with that, making great grounds on that, and that will continue to be a priority for us in parallel. So really back to the investment highlights, it really speaks to now more clearly, the team that's here, anchored by myself, bringing a tremendous amount of discipline to the table and know-how about what's required to unlock this in a way that's predictable and reliable from a producer standpoint. The scale we have already at 2 million ounces, our opportunity to double that in fairly short order is huge and significant. It not only speaks to the economics we have today, but our ability to really ramp up those economics in the coming months and year, and really continue to re-rate against our peers. So with that, and just a quick word about our capital structure, our financial prudence is equally as disciplined. I think we've kept this very tight. We're fully funded for the year for our drilling of 20,000 meters and 3 drills. We've kept around 100 million shares outstanding, just over 22%. Management did some buying just over the last couple of weeks, given the dip in price and opportunity for that. But we're somewhere between 22 and 25%. And the retail that we have, at least 30% or half of that is very tightly held with sort of anchor retail folks that have been in from day zero with us as a private and then going into the public and reinvesting there. So very tightly held, you could say, is about 50% of the company for sure. Institutional investors, we're opening the book on that now as well. We've got 2 notable ones in there. I think Delbrook and Alpha North as well as probably our 2 biggest ones. So that, and I should say the warrants that we have are held mostly by that tightly held retail I spoke of. So really a tightly held package we have here. And now with that, we've just had a non-paid analyst coverage start with SCP Resource Finance with Brandon Gaspar. We'll likely have some others coming in as well fairly shortly. So I think it's a great start to who we are and what we've been doing. We've obviously been very busy and aggressive about positioning and moving forward. Now that we're listed and bringing that value to shareholders, we're excited about what this year will bring.
Awesome. Well, Brandon Gaspar is an analyst who's smart as a whip. That I know that for sure.
Indeed.
Yeah. So Robert, we do have a couple questions here. But I'm curious. I know that you drilled a little bit outside the MRE pit in the resource. Have you learned anything about that deeper drilling that kind of gets you more excited about what's at depth?
Yeah, that's a great question. I mean, I was running at speed and sort of skipped over that, but the first drill hole we drill at depth beneath the pit of Tesorillo to extend it, but also probe what's at depth and start the early stages of finding that feeder zone, right? The secondary zone. We did hit. I mean, our grades quadrupled. Copper started coming in at the end of that hole. So we know we're getting close. We just finished another hole. So if I put my fingers up, this is one hole that went beneath the pit, right? We just finished doing another one that's beneath that, downwards of about 800 meters, just finished. We don't have all the assay results yet, but what our geologists are seeing has us pretty excited in the way that it is continuing to open up a whole new mineralization, a type, likely into that feeder zone, but certainly indicating huge potential beneath Tesorito that we're just beginning to see. Ergo, while it's why we're moving a drill over onto Seabell to start drilling deep with it in parallel with Tesorito. So we really start attacking what's at depth while we continue to build out and go after, the easier ounces on surface and resource growth.
Perfect. Thanks so much for your time, Robert.